Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets on this January 28th, 2026. We've got a packed day with some critical updates from the Federal Reserve, standout performances in tech stocks, and a flurry of earnings reports to keep an eye on. So let's dive right into the key highlights and see what's moving the needle for long-term investors like us, while also touching on some short-term trends to keep things spicy. First up, the big news of the day comes straight from the Federal Reserve. As expected, the Fed decided to hold interest rates steady in the range of 3.5% to 3.75% after a series of cuts in prior meetings. Fed Chair Jerome Powell emphasized that risks to employment and inflation have diminished, and the central bank is taking a meeting-by-meeting approach to future policy moves. This cautious stance signals stability for now, which is great for long-term planning, but it also means we might not see aggressive rate cuts anytime soon. Powell also addressed concerns about the Fed's independence, calling it vital for serving the public, amidst some political noise and even a Supreme Court case involving a Fed governor. For us as investors, this reinforces the importance of focusing on fundamentals over short-term political drama. Central bank independence is a cornerstone of market confidence. Let's check in on the major indexes to see how the market reacted to this news. It was a mixed bag today, with the S&P 500 hovering near flat, showing a tiny dip, while the Nasdaq managed a small gain, up a fraction of a percent, driven by tech strength. The Dow Jones also eked out a marginal increase, staying just below a major milestone, and the Russell 2000 saw a slight decline, reflecting some pressure on smaller caps. Overall, the market seems to be digesting the Fed's steady hand without much drama, which aligns with a long-term view of gradual growth over knee-jerk reactions. Now, let's spotlight some of the big movers among large-cap stocks. Tech was the name of the game on the upside, with Seagate Technology stealing the show, rocketing up nearly 20% after strong quarterly results and raised guidance. Other chip and memory players like Intel, Micron Technology, and Western Digital also posted double-digit gains, fueled by robust demand in data centers and AI infrastructure. This kind of momentum in tech is a reminder of the sector's long-term growth potential, especially as digital transformation continues to accelerate, though short-term volatility can always pop up with earnings surprises. On the flip side, not everyone had a great day. Carvana took a significant hit, dropping over 14%, likely tied to broader concerns in the used car market. Cloudflare also saw a double-digit decline, and Amphenol fell hard after earnings, despite beating estimates, suggesting some profit-taking or forward-looking worries. For long-term investors, these dips can be opportunities to reassess entry points, especially in names with strong fundamentals, but the short-term pain is worth noting as a reminder to stay diversified. Looking at the most active stocks by volume, Nvidia continues to dominate trading activity with a modest uptick, reflecting ongoing investor interest in AI and semiconductors. Intel also saw heavy action after its big gain, and AT&T popped up with a nice increase, possibly on some sector rotation. These high-volume names often signal where the market's attention is focused, and for us, they're a pulse check on sentiment, especially in tech, which remains a core growth driver for the long haul. Among the key market movers, Intel's surge stands out again, alongside Micron's strong performance, showing how the chip sector is capturing investor excitement. On the downside, Palantir slipped a bit, possibly due to some rotation out of high-growth names. These movers highlight the tug-of-war between tech optimism and selective profit-taking, a dynamic we need to watch as long-term trends in AI and data continue to shape portfolios, even if near-term shifts create noise. Shifting gears to earnings, it's a busy week with some heavy hitters reporting. Starbucks kicked things off with a bang, posting its first U.S. sales growth in 2 years, a sign that CEO Brian Niccol's turnaround plan is gaining traction. Apple is up next, with expectations high for iPhone demand to drive results, while Intel's upcoming report will be crucial after today's price jump. Other names like Amazon, MasterCard, and ExxonMobil are also on deck, and their results could set the tone for their respective sectors. For long-term investors, Earnings season is a goldmine for insights into company health beyond daily price swings, though short-term reactions can offer tactical entry or exit points.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Zooming out to a one-week view, some large-cap gainers have been making waves. Cloudflare topped the list with a nearly 19% jump over the past week, showing resilience despite today's drop. Ericsson and Corning also posted strong weekly gains, benefiting from tech and communications momentum. These weekly trends can signal sustained interest in certain sectors, which is valuable for long-term positioning, even if day-to-day moves fluctuate. Conversely, the weekly losers paint a tougher picture for some names. Humana and United Health Group saw steep declines of over 20% in the past week, largely tied to disappointing Medicare Advantage rate proposals. Intel, despite today's bounce, also had a rough week prior. These drops underscore the importance of sector-specific risks, like policy changes in healthcare, which long-term investors must weigh against broader portfolio goals. Let's wrap up with a quick look at sector performance over the past week. Industrials led the pack with a solid gain, followed by energy and basic materials, buoyed by infrastructure and commodity trends. These sectors might not always grab headlines, but their steady performance can be a stabilizing force for diversified portfolios over the long term, especially when tech takes a breather. On the weaker side, financial services and consumer cyclical sectors lagged over the week, reflecting some caution around consumer spending and interest rate sensitivity. While these short-term underperformances aren't necessarily deal breakers for long-term holdings, they remind us to keep an eye on macro conditions that could impact specific industries.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.